Okay, welcome, Jake. So, could we just start by a quick introduction about yourself and dHEDGE and what you guys do?
Yeah, sure. Hi, everyone. And firstly, congratulations on the community. I was admiring the calendar that you had up at the start of the call, and it's action-packed here you've got ahead. So congratulations. Yeah, I'm Jake. I'm Head of Growth and Marketing at dHEDGE. dHEDGE, has anyone heard of dHEDGE before? Hands up. Great, awesome. What about synthetics? Have you heard of synthetics too? Cool, okay. So the reason I bring those two up is because dHEDGE was the first protocol built on synthetics back in 2020, mid-2020, so about 2 years old. Fully decentralized, non-custodial, is that better? Yeah. Fully decentralized, non-custodial asset management platform on mainnet, Ethereum, Polygon, and Optimism, which means that we set up an asset management space where you can set up your own fund and run it, and you can also invest in other people's funds. Yeah.
Cool. And how did it come about? Sort of what drove the idea to, I guess, come about? Synthetics has been around for a couple of years, so yeah, talk us through.
Yeah, sure. Yeah, so there was three founders, Ermin Jurovic, Radek Ostrowski, and Henrik, Henrik Anderson, who's the CIO at Apollo Capital in Melbourne. And the synthetics protocol, when it developed, the synths that it created, so synthetic assets on chain, gave the opportunity to manage funds in a very decentralized way safely so that it's non-custodial. So if you're an investor, you can allocate your assets to a pool that can be managed, but you always have access to pull them out. And so the synthetic assets that were created enable this opportunity. So in the 2 years since, we've developed the protocol out, but that was the concept of it. That was where it began.
And is dHEDGE operating as a DAO? Is that correct? Yeah. So I think synthetics is now fully decentralized as decentralized as you can be. I think I heard Kane talk about it at the AFR Crypto Summit. So with dHEDGE, could you talk us a little bit about what it's like to run it as a DAO? What are some of the positives? What are some of the negatives that you're seeing? Yeah.
Yeah. So as a DAO, dHEDGE has a token, the dHT token. And primarily we use that token for governance. So of the 3,500 token holders on mainnet, they can participate in the development of the protocol. So whenever we put a new integration proposal up or something to develop the protocol, then we go through the typical governance processes like a forum proposal, which then goes to snapshot so that people can vote something in or vote it out. And again, very heavily community oriented. So we operate all the typical community infrastructure like Discords and community calls and active social media and things like that. But the dHT token we also use to incentivize good investing behavior via offering rewards for people invested in pools that are doing well. So you get an extra incentive for being in positively yielding pools. And yeah, and you can also stake the dHT token to earn extra incentives for participating.
Going off script here, but how one of the problems with DAOs is sort of participation in terms of voting. How are you finding that, sort of in terms of not percentages, but yeah, do you find your members participate quite actively?
Yeah, I think, just reflecting on James's comments in the previous interview, like through the bear market, engagement fell, obviously, because as a lot of liquidity came out of the ecosystem, there was less motivation to participate. But we still see a high rate of participation in voting, and Discord ticks over quite frequently. So there's still active community, and we see it through the investors. So there's, I think I mentioned 1,500 pools created in the last 2 years by over 1,000 managers. And of those managers, there's been about $1.5 million in fees generated for the managers operating those pools. So there's a strong engagement history that we're looking to keep building out, and I think our product development is showing that.
Great. And same as for James, the same question about operating in sort of a bear market. What's the, you partly answered that already, but what's the sentiment? What's the general outlook? Sort of, yeah, how are you thinking about the current state of play?
Yeah, sure. It's a good question. I think we took the opportunity to really focus on the product and develop a whole new protocol built on top of dHEDGE. That's what the Toros column is on the screen at the moment. Toros is where dHEDGE is an active management platform, being that if you are a manager, you're manually, actively managing your asset allocation using these integrations on the screen. Any of those integrations? Well, Liya is still coming, but it's past governance. Toros is the opposite. So Toros is fully automated. So we have automated strategies that you can invest in and you can buy the token for and have a strong expectation of what that strategy is going to do. So as an example, again, just to reflect on James's comments before, we're launching a delta neutral hedge strategy tomorrow on Toros, which will follow a typical delta neutral strategy, which, you know, it's interested, we can go through after the interview. But yeah, that protocol is growing really quickly. And so we thought that it was a good complement to the existing product offering. And it was really great to focus on that through the bear market.
Great, thank you. And in terms of next steps, priorities, what are you looking towards? Obviously, Toros is new and that's just come out. Anything else that you wanted to share with us? Are you growing the community or raising funds?
Yeah, for sure. So always looking at improving the dHEDGE offering. So we're about to launch a new strategy tomorrow, so the delta neutral hedge strategy. And then there's a Liya integration which will be coming out soon, TM. And so that'll give dHEDGE managers the opportunity to manage with options in addition to the remaining, what are they? So you got lending, spot trading, options, liquidity providing, leverage, like the full suite of DeFi applications you can do within a dHEDGE managed fund. So it's quite dynamic, and options are the next thing to bring, and then after that we'll probably look at bringing in the Quenta futures product after that. So a strong roadmap ahead.
And how do people find you? How do they get involved? Sort of where to?
Yeah, so the websites are on the screen. There's dhedge.org or toros.finance. Discord links are on those sites, Twitter accounts, etc. And yeah, the Discord's ongoing all the time, so the more the merrier. Come in and create your own fund. You can set up a fund on dHEDGE yourself. No KYC, full decentralized, no minimum investment. Anyone can get involved, so it's great. There's no, yeah, that's up to you. That's off chain. We're only focused on chain as a matter. Yeah.
Awesome, thank you. Any questions?
Test, yeah. Thank you very much for your presentation. Quick question. So obviously your focus EVM, ETH, Mainnet, Polygon, Optimism. Any plans to roll out to other EVM compatible chains, AVAX in particular? Institutions are loving that to high hilt, and Phantom. So any possibilities to roll out to other EVMs?
Yeah, it's a good question. The roadmap was, we launched on Polygon about 12 months ago, August 2021, and then got to Optimism December 2021. And so since then, we've been really focused on the product development. The decision to go to Optimism was like 50-50 Arbitrum or Optimism, and Optimism won out that vote. But at the moment, we're not considering any other L2s or competing L1s. The main reason is because we've built this sort of integration ecosystem that we're focusing on and trying to keep close to that for the time being, and also probably the relationship with Synthetics is very sort of close to the product development, and so Synthetics is only on Optimism and Mainnet. So that's sort of the decisions driving that product decision.
Hey mate, thanks. I'm interested in the custody piece. So when somebody invests in a fund that's hosted on dHEDGE, does the fund manager, is that the right term, right? Do they then receive the money and then move it however they wish? Or can you just explain the custody to us?
Yeah, that's probably one of the key benefits of this platform, is that it's entirely non-custodial. So the way the contracts are set up is you as a user commit assets to a contract, that the manager operates that asset allocation. So you at all times can pull assets out of that contract, and the contract is where the custody occurs. So the manager doesn't own it, the investor doesn't own it, it's locked up in a contract. Manager can't pull your funds out, so the manager can just move them, but they can never withdraw them. So you always retain control of your assets.
We've got one more.
Sorry, I know you can't see me, but the question is, how does your product compare to Enzyme?
Yeah, good question. Enzyme's probably a direct competitor of dHEDGE. Enzyme, I think, is on a different, I think we're both on Polygon and Mainnet, if I'm not mistaken. But yeah, very similar offering. I think Enzyme has moved a little bit more into the index side of things and offering sort of managed indices. Whereas, but again, there's a lot of product overlap. So it's a good comparison to Enzyme as a similar protocol.
Awesome, thank you. Round of applause. Yeah, oh, do we have one more? Sorry, all good? Okay. After. Over to